Now, annual inflation in the United States, it's at an over 40-year high. According to government reports released on Wednesday, inflation, that's the rate at which prices rise, hit 9.1% annually in June. This has been blamed on prices of petrol and food remaining high in the recent months. Inflation will now be a top concern for many Americans and is likely to influence many voters in the coming midterm elections in November as well. U.S. petrol prices hit record highs last month, averaging above $5 per gallon. The latest data has led to predictions that the U.S. Federal Reserve Bank will hike interest rates once again later this month. Some experts believe that the central bank can raise rates possibly by 100 basis points this month. The U.S. annual inflation rate is now at its highest level since November 1981, having risen from 8.6% back in May.
The Fed has been very clear that they're going to go out and try to be aggressive upfront earlier on over the next couple meetings, as opposed to waiting later in the year. And so I think that this doesn't directly affect their plan. Their plan is, they're going to go out and raise interest rates probably by another 75 basis points at their next meeting. I do think that what's probably concerning for folks who are at the Fed is just looking at the extent to which prices, not only of food and energy, but also of those core goods continue to rise.
Now, prices in the country have been rising steadily since late last year. There are many reasons for this. First, there were supply chain disruptions from the COVID-19 pandemic. The war in Ukraine pushed up commodity prices globally. Some economists have also blamed government's COVID spending programs for worsening price hikes. In total, it deployed $5 trillion worth of stimulus to shield households and businesses from the economic shock of the pandemic. Food, housing prices also rose in June, as did car prices. Though the rate has stabilized or slowed from the past month, even so, the big jump has left President Biden open to intense criticism from both the Republican Party and the public. Biden, however, has insisted that tackling inflation was the top priority. This is him in July last year promising that the problem would be temporary.
Our experts believe, and the data shows, that most of the price increases we've seen were expected and are expected to be temporary. My administration is doing everything we can to address it. But again, these disruptions are temporary.
A year later, and the problem is worse than ever. But the president's drive to tackle the problem continues. He is in West Asia this week. He will visit Saudi Arabia on Friday and is expected to push the oil-producing country to increase the production and lower the prices here. But consumers back home, they remain unconvinced.
Food prices are up a lot. Notice it in, the basics like eggs and milk, and you go to the fruit aisle or the fresh vegetable aisle, there's nothing less than like $3 or $4 per pound or per whatever. I mean, peaches are $1 each. It's kind of crazy.
But not only the things are more expensive, the portions are smaller and the prices are higher, so they try to trick you. What was 12 ounces now is 10 ounces, but only 10 cents more, so it's not too bad, but the content is smaller.
Fish is astronomical, and we adhere to the Mediterranean diet, so it's been, it's just two of us. Our groceries went up from about $135 to $150 a week to $200 and over. So I've made some adjustments, and this is the way it is right now. There's too many crises going on in the United States and in the world to be handled all at one time, and to make anything really make a significant difference in the economy at this point.
Now, for more on this, our correspondent Susan Tehrani has sent us this report. Let's listen in.
Rising prices for food, gas, and rent caused U.S. inflation to surge to a new 4-decade high, squeezing household budgets, but also putting a pressure on the Federal Reserve to raise interest rates once again, as talks of a recession become more serious with each passing day. The government consumer price index soared 9.1% over the past year, much higher than Wall Street had anticipated. And as consumer confidence in the economy continues to decline, so does President Joe Biden's poll numbers, as Democrats are concerned how voters will see these numbers leading up to the November midterm elections. After all, inflation continues to be America's #1 concern. Still, some economists are optimistic, saying that perhaps inflation has already reached its peak. For example, gas prices in mid-June were $5 a gallon. On Wednesday, they were $4.63. Still a lot higher than last year, but lower than mid-June. Susan Tehrani reporting from New York for WION. World is One.
And for more on this, we're also now being joined by Andrew Freire, CEO of Ecognosis Advisory, for more insight on this. Thank you so much for joining us on this broadcast. Now, at this point, my first question to you is it safe to say that the U.S. Federal Reserve will raise interest rates again soon? Or perhaps the real question here is by how much? What are your thoughts?
The answer to both of them is yes, to the extent that I do believe when the Fed says something, I have no reason to doubt about it. And in all probability, they may avoid going for a 75 unless they're absolutely certain that inflation keeps accelerating. It's very important. If there is any doubt that it might be reaching a peak, perhaps they will go for a 75 as opposed to 1%. But I do expect that interest rates will increase. However, and that's a huge however, if I may continue, it is absurd to expect that increases in interest rates are going to bring down petrol prices. Now, in the 9.1% increase in the CPI for June, about 7.5%, okay, out of the 9.1%, 7.5% was caused by petrol prices. How increases in interest rates going to bring this down? And also you mentioned food. Food was almost irrelevant. It was about 1% in the increase of 9.1%. And again, even if it was food, how on earth increases in interest rates will affect this? You know, I'm in despair to really understand the reasoning of the Fed aggressively increasing interest rates when it has nothing to do with domestic demand.
Right. Well, interesting point there. And at this point, by your analysis, what are the chances of a recession hitting the United States, if at all, by the end of this year or the next year? And if that happens, what would its impact be on the rest of the world?
I'm going to be a little bit pedantic here. Recession doesn't mean anything. What it means, that the economy is slowing down. It is. The recession actually agreed means 2 quarters of GDP growth, back to back, quarter on quarter, negative. Quarter on quarter are uselessly meaningless statistical devices. But never mind, that's the agreement. So if you're asking me, are we going to see a recession as agreed? The answer is no. Now, are we going to see a deceleration in the economy? Well, we're already seeing this. In other words, if I see industrial production, exports, in particular, expectations, they're all pointing downwards. But flighting around the expression, is there going to be a recession, and what's going to be the impact of this on us, depending who is us? Individual economies, individual countries. In the case of India, for example, which is an economy which is completely domestically driven, exports play a very, very small percentage in adding to the GDP growth. A recession in the United States should have effectively very little effect. If I look at China, I will tell you exactly the same. China is a domestically driven economy. And incidentally, both China and Japan, 2 of the 4 biggest economies in the world, do not have problems with inflation. We are obsessed with inflation in the States. Japan doesn't have a problem with inflation. On the contrary, they want more. Read my lips. They want more inflation, not less. It's a strange world. I completely agree with you.
Right. All right. And also, how do you assess the role of Russian-Ukraine war? And President Biden will be in Saudi Arabia on Friday. Is there any expectation that something will emerge from this visit vis-a-vis oil production?
Well, oil production, yes, it will be useful because Russian gas exports are being clamped. And if they're going to clamp also on oil, it will be a good idea if we have some alternatives into that. But it must be remembered, oil is not used for energy in terms of electricity. Nobody burns oil to produce electricity. Oil is primarily used for transport. Again, because this is lost in the discussion. Oh, oil prices are going to go up. It means that my electricity bills are going to go up. No, they won't. What produces electricity is coal and gas. And prices of gas have been actually coming down, not Russian gas, and the same thing with coal, be that as it may. What's happening with Ukraine? Yeah, as long as the war continues, we will continue to have the questions and the issues about the Russian gas and Russian oil, and this most definitely did affect prices, particularly in the European Union. I'm not saying there is no inflation. I'm saying there is a big inflation, but not everywhere. And of course, also in terms of supply constraints, particularly in the case of food.
Right. Well, Mr. Andrew Freris, thank you so much for joining us with your analysis and your insights of the situation.
It's a pleasure. Thank you.
WION is now available in your country. Download the app now. Get all the news on the move.